Let's say your house gets burnt. Okay, insurance will pay, I understand. But the thing is, if the insurance pays less, then if just saying, basically your risk of losing all your money becomes very low. I previously gave the example of Sue, now I give the example of any natural calamity or something, or some accident or something. Your risk of losing all your money is zero. Because mortgage, even if you're not able to pay, that's a non-recourseable loan. They cannot do anything to you. You simply have to leave the house. Within this, if you want to leave the house, you should know that they take 1.5 years to ask you to vacate the house. So you can live rent-free, mortgage-free for 1.5 years. That much you will save also. So when you count the benefit of mortgage, I don't know how this whole strategy will work because I have not practiced, but it's possible that if you stop paying the mortgage and let's say you are underwater in the mortgage, and for some reason it's 7% and the interest rates are now going down, and you're in a situation, I don't know why, but I don't know why you would want to foreclose on your house. But if you're foreclosing even for 1.5 years, you don't have to pay any mortgage, and then it's a non-recourseable loan. It goes on your credit history, but then it gets wiped out in 3 years. Did you know this? Non-recourseable loans, if you don't pay, they get wiped out in 3 years. It doesn't come in the analysis. Did you know this? Yeah. So then tell me, what is the point of ever paying the mortgage? There is no point of ever paying the mortgage. With all the money that you get, I told you that a very good organic investment is S&P. In 30 years time, it will definitely give you very good returns, right? This happened in 22 January, the interest rates were very low, around 2%. People took all the money out and then but then after some time, it started to become good. Yeah. Like it became 5% now in 24 January. Even before that. So people are now they are having 3% extra cash flow every single month. In my case, $2 million into 3% is $60,000 per year. Free, just because of finance. Free. And that gives me a surety of life. I know that I'm gonna make 60,000 for the next 30 years or forever, pretty much. Forever. And after 30 years, I'll make even more because I don't even have to pay that 2%, right? Or the principal, right? So the point is, guys, tell me something. Why would anybody not refinance a house when it's less than 4% or 3% or 2%? Because there are ample opportunities to make more than 7-8% in this thing. And even FD in certain cases pays more than this. So why would you not wait for FD to give you 5% or higher, or 4% or higher, or 3% or higher? You will immediately start making 1%. Mortgage rates were at a historic low, so it was a no-brainer to take all the money out and put it in an FD. For now, at that point it was maybe 1.5% only, but very soon it became 2.5%, and you started making 5% on your income. And that was the minimum. So because FD is is a no-brainer thing, right? By the 250K worth of FD is insured, you know that. You should open 8 FDs in 8 different accounts. So open 8 different FDs in 8 different banks, in my opinion, so that your risk is even lower. Yeah, but then why would you not do that? Or just put it in S&P. That's the better move. I'm just giving you all conservative ideas. S&P 500 is a very conservative idea too. So that's what you will do. That's what you would do, right? My point is, guys, hello. Why would you not do that? Why would you pay off your mortgage? Did you understand the math, guys? That money can grow tax-free. Everything is tax-free, so why would you pay it off? Right? It's a no-brainer investment that I've told you. It's a no-brainer move not to pay off your mortgage. By God's grace, if the 40-year mortgage, I'll say, we go with 40 years. 30 fixed, 40 year fixed. Because it's 5 by 1 arm, after 5 years, it's going to kill you. If it's a balloon, it can kill you. If it's 10 by 1 arm, it can kill you. 10-year fixed, you're really not making 10 years. It's not a great 30-year fixed. Because in the last 10 years of your life, the value of that money will be very, 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 very low. Yeah. The wages would increase. Even for like the thing that you're doing now, by the way, your wages will increase also in the next 30 years. So it's a no-brainer, buddy. It's a no-brainer. It's a no-brainer. Isn't it a no-brainer? So that's my thing. Okay. So mortgages should not be paid off. You should keep your mortgage Always, if it is less than 5%, it's no brainer. If it is less than 6-7%, you should be careful. If it's less than 8%, well, then time will, if it's more than 8%, times will come when it will be less. Wait for those times. But for now, try to pay it off so that you're not paying too much money. Okay? This is my basically the formula that I have devised in the last 25 years of my experience. It's all in the business 25 years of experience. By the way, I'm not a financial advisor. I don't know anything about finances, guys. I'm just a regular guy like you who is sharing his experiences in an honest fashion with you. Whatever I'll say honestly. Okay? And that's why I keep on doing the research on these items. If tomorrow I find some new factor, I'll share it with you, honestly. I'm gonna try to brag, oh, you know what, I made a video in November 24, I have to stay correct, I cannot change my own words. No, if I find something new, I'll tell you. Why not? Okay? But anyway, for now, and this is what my experience says, never pay off your mortgage. Okay? Alright guys, enough. Thank you. Thanks, bye-bye.